Welcome to the 30 Days Learn to Trade Challenge at Option Pundit. And we've designed this challenge especially for beginners who would like to learn how to start trading or the investing journey. And we'll do that through these videos via a framework of 4 key pillars, which are solid foundation pillar for any investing and trading journey. And these 4 pillars are the process of trading, the risk management, the cash flow, and the trading psychology. And we have been going through the trading process. Now, depending upon which video you are watching, it might be a cash flow or trading psychology or any of those. It doesn't matter. But this video, particularly this tutorial today, will be particularly focused on investing approaches. Now, if this is your first video you're watching, I suggest that you go back and you begin from the day one, watch the first video, and then move step by step, because we have been following a very disciplined step-by-step approach to take you from nowhere all the way to get you started with your investing and trading journey. Hi all, this is Manoj, your coach at optionpundit.com, the #1 place for smart traders and investors to do safe trading, simple and stable approaches to generate consistent money year after year, year after year. Let's get started. You see, once you have finished, you have identified your key challenge, your biggest challenge. You've also identified, your starting journey. You've figured out your ROI, or basically the return on investments that you need or you would like to achieve for reaching your financial freedom targets. The next thing is, how do you deploy that capital? What are the different approaches that are available for you, or what are the different opportunities available for you to use that capital? Okay, so this video tutorial is I'm going to explain to you multiple investment approaches in this tutorial. Let's get started, and let's begin with that, understanding the opportunities that are available to us. Once you've figured out the biggest challenges which are stopping you from starting your journey, you've figured out your key objective or the reason to start this investing and trading business, you've figured out your starting point and the capital available for you. The next crucial point is, how do you deploy that capital? What is the most effective way, or what are the opportunities available for you to deploy that capital? And that is what this tutorial is all about. So let's get started. So I'm going to show you the money in a way showing you different approaches that you can use to deploy your capital. Okay, so let's get started. There are many popular ways of making money, and those are, you can invest money in the equities or the stocks. It's the same thing. Some people call it share market, some people call it equities, some people call it shares, some others call it the stocks, but it's basically the same thing, where your popular stocks are being traded, like Apple, Microsoft, Reliance, Punjab National Bank, or anything that you talk about, and they are being traded at a particular exchange. The other very popular way of investing money is the bonds, and these bonds may be issued by corporates, or these bonds may be issued by the governments all around the world, or your popular government. So for example, if you happen to be in Singapore, then this might be Singapore government bonds. If you are in US, then these are like treasury bonds. If you are in a country like India, for example, these may be RBI bonds, or the bonds issued by your local banks as well, or Kisan Vikas Patra and things or other types of things, which helps you to make money on a consistent basis. You get a certain coupon from those issuers. The next major way or popular way of making money is the real estate. You go in and invest your money, buy some property, rent it out, and you expect the prices to go up, and then you can choose what type of and how much capital you have. You can choose and build your portfolio of real estate properties. The other way is simply cash, and when I say cash, I'm referring to the fixed deposits. You go to the bank, you give your money and say, hey, it's liquid form, I'm going to keep this money for a certain period of time, and you get some money for it. Okay, then the other approaches for investing money are, for example, metals like gold, silver. Now, some people do this as a disciplined approach of investing money in gold and silver markets, and some do that via paper gold and paper money. Yes, you may not know that the paper way of gold money, like for example, the gold ETFs and silver ETFs, and you can buy and participate in gold and silver or other precious metals market as well. And As you look across, there are many other things also that where you can make money. For example, some alternative investments like arts, wine, and so on. So we'll not go into those. We'll just talk about primarily what are the major investment approaches or the investment vehicles, so as to speak, are available to the retail traders. Now, once you figure this out, I'm going to talk about primarily in this the financial markets, because those markets are offering very, very asymmetric opportunities for the retail traders like you and I. So let's get a deeper understanding of what financial markets are and how and what sort of opportunities exist in that. What you see on the chart is a description, or rather data pointing to like going back 120 years, showing you exactly on how stock market has been behaving. So if you look at the blue line on both the charts, the first chart is in nominal terms and the second chart is based on inflation adjusted pricing. So if you look at the first one, and this is actually showing for US market, let me also mention that. If you look at the blue line, you'll find that if you started your $1 at the beginning of 1900, that will become $58,000 by now. Okay, so which comes out to be approximately 9.6% per year. If you look at it inflation adjusted, the second line or the second chart with real term, it is from $1 to 1937. So basically, it's about 6.5% per year. So which is also pretty significant. But what it's telling you is that if you look at some other major forms of investments, the stock market has actually returned great results, whether you look at it in nominal terms or whether you look at it inflation adjusted. Now, I would encourage you that you'll go back to your regular markets or your country's market. It may be for India like Nifty and Sensex. It may be for Singapore. It may be for Straits Times Index. For US, yes, I'm presenting to US S&P 500. But look at other indices as well. If you're calling in from South Africa or you're calling in from Dubai and all, please look at the respective markets and see how different asset classes have performed in that country or the geography that you are living in. Because then when you choose, you're making a much more intelligent decision. Now, of course, I'm going to focus on stock market, so I will just show you the power of stock market as well. But it is a good practice to go through and review the traditional asset classes returns in your country specific as well. Now let's look at BSE. This is just for Sensex. To understand, if you look at top 30 stocks out of 300, what sort of money that you would have made. And it's pretty interesting. First of all, it's backward looking. It's just showing you the past performance. What if you would have done that? Now it's coulda, woulda, shoulda. That time has passed. But you can use this data to give you an idea, how stock market has transformed the wealth of people in that country. So if you take an example of like PI Industries, which is happen to be at the top, the 20 years returns are 171,000. I mean, that's mind-boggling. If you invested 10,000 rupees at the time, that becomes approximately 171 crores. That's enormous. If you look at even the companies like, if I look at second from the last, or maybe third from the last, Titan, 33,000 returns. And it is at that point of time, and since then, Titan has been also growing by leaps and bounds. You just got to go and look at Titan charts, and you will find that it's been really doing amazing. So the whole purpose of this slide is to show you that, if chosen correctly, and if you participate in the stock market correctly, especially after 1991, when the then PM of India, Mr. Manmohan Singh, just liberalized the whole economy, and how the markets started to explode. And the story is not so different for other markets also. If you go back and look at S&P 500 since 2008 and 2009, S&P has gone up like almost 6 times. Almost 6 times, from 667 low in March 2009 all the way to 4,700 recently. This is phenomenal growth by any standards from a long-term compounding perspective. So when we are dealing with markets, there are actually multiple types of approaches, and I'm going to share with you a few approaches, and we'll go and deeper to understand what type of approach may be suitable to your lifestyle, what type of things that you like, for your trading or investing. The very first is about value investing, and I will go deeper into value investing in one of the following tutorials. But value investing is really figuring out whether you are buying values, whether you're buying that businesses at a discount, or what price are you paying for that business in relation to the value it is offering to you. Now, some people just think value investing is all about finding the intrinsic value, look for margin of safety, and do it. Well, it's really not. There are several components of value investing that you have to look at, and I will talk about that in a subsequent tutorial about value investing. The second most popular approach is called technical analysis investing. Now, technical analysis investing is reviewing price, volume, and other indicators to see and make certain judgments. There are several classes of technical analysis which I will cover in future tutorial also. But once at the end of the day, it is all about giving you some sort of quantifiable signals that you can use to make a decision. These are typically short term, and so this question also come in. I'm just sorry for a sidetracking. Just a minute to explain to you. Some people think that investing and tradings are two different things. In my opinion, both are the same. For one is this longer period. For another one is a shorter period. So trading, I would call it, is a shorter term investing. And that investing as it is called, is like really long term investing, like years. You buy and hold for certain years. So the key difference between value and technical is of holding period. Okay. And technical analysis also involves studies. Some may be mathematical, some may not be mathematical, some may be visual, some may be statistical. We'll go into more details in a separate module on what is a technical analysis investing. Another major approach is market neutral trading. Now, market neutral trading cannot usually be done with the stocks alone. You need to involve derivatives into it. You need to involve options in it, so you can create a market neutral structure. Now, what do I mean by market neutral structure? It's saying like, bulls make money, bears make money, and pigs get slaughtered. Or put another way, like I used to call it, bull or bear, we don't care. So you look for approaches that you can involve and use for any market conditions. It doesn't matter whether it is bullish or it is bearish. Then third one, or last one, in my opinion, is going to be statistical. Now, what does the statistical trading means? If you look at the statistical trading, these may be pairs trading. These may be based upon merger and acquisitions. You look for the value which might be based on that. And more prominently, statistical trading will also be based upon several factors and parameters. You look at it, you need to have a solid infrastructure to figure out whether statistically that's a superior investment over others. And there are many more methods of quantifying it. Now, some people also call it algorithm trading, but in my opinion, algorithm trading is more falling into the technical analysis investing. Now, it doesn't matter what method you use. At the end of the day, there are several methods of investing, and you have to choose what makes and what works for you. It may be value investing, it may be technical, or it may be market neutral or statistical trading. I'm going to explain to you the massive opportunities that are offered via markets, and especially I'm referring to more from the market cycles perspective. Now, cycles are something that you can qualify either in value investing or trade technical. It doesn't matter. In my opinion, it encompasses all the approaches, and that begins with profiting from the panic. So this may be like the bear markets, where the markets are going down, and you learn how to profit from those markets as well. Profiting from the greed is the bull market, and if you see it, the 2020, after the market crash during COVID-19, the market really rallied hugely. If you go back to March 2009, and you look at what happened to the markets rallied. So it's profiting from the greed. It's profiting from the massive bull run that is taking place. And then there are sideways markets. You see the choppiness. If you look at S&P 500, especially from October till Jan of 2021 and 2022, you'll find that the markets have been just going up, down, up, down, up, down. And those something called whipsaws. So as you build your trading approach, and as you start to deploy your capital, you have to think about what sort of market attracts you, so that it is aligned with your personality. And then not just the personality, you also need to mix it with the ROI, whether or not that personality is going to deliver the ROI you're looking at. You may say, oh, I like, the bonds type of investing. But if you like bonds type of investing, safe, totally protected, then you know that your ROI is not going to be huge. Typically, it will vary between 0.5 to 4-5% depending upon the country you are in. And in some countries, maybe slightly more. But in general, it's not going to be huge. And if you're looking for the stock market or financial markets to invest your money, then you need to choose. Are you going like a value investor type, or you're looking for short-term technical analysis based trading, or you're going to look at the market neutral trading? Or in the end, you may say that, I'm a full-time working person. I don't have so much time to go and analyze thousands of companies. So maybe value investing isn't for me. And I'm looking for some short-term trading, some technical systems-based approaches. You could do that as well. So as a homework, I would like you to do a little bit of retrospection, think about it, and share with me what type of trading attracts you. Is it the value investing that attracts you? Is it the technical analysis that attracts you? Or is it the options trading type of things that attracts you, which gives you a higher ROI? So take a moment, think about it, and share with me what type of approach, what type of trading or investing approach attracts you. And when we come back in the next tutorial, I'm going to share with you these approaches in more details. And then we will peel apart, pull by one, step by step, sharing with you exactly more in details what a good technical analysis mean, what a good value investing mean, what are the indicators, how do you put together the indicators to create your winning strategy. We are just getting started, and I hope you are as excited as I am. So make sure you do the homework of figuring out and telling me what type of investing approach attracts you and why. Make sure you write that. And if you are new to our channel, you're just watching it, please make sure that you hit the subscribe icon, you hit the bell icon, and stay connected with us. We have got lots of powerful and amazing content for you on this. This is your coach Manoj, and look forward to seeing you in the next tutorial. Till then, stay safe, stay healthy. See ya.